we are starting actually pretty flat as far as the index is concerned.
I think a full-blown capex recovery can only happen after 2019 elections.
In the December 18 quarter, we saw an increase in the stalled projects.
The market's down about 30-odd points, and there isn't very much in terms of news flow to tackle at this point in time. We're basically back almost to the day's low. The low was recorded at 10,700, and we're about 10 points off it.
Ending at the lowest absolute low point. Now we're two back-to-back really bad days for the market. Let's see how things move now. We've now priced in a lot of damage for global markets overnight.
Apple warns of a Chinese slowdown and the world catches a cold. The Sensex and Nifty shed 1% in second straight day of sell-off. All sectoral indices end in the red.
Commodity stocks take it on the chin, with the index losing over 2%. Metal stocks and oil refiners slump due to fears over a demand and a potential global slowdown.
Auto stocks continue to reel under pressure after weak December sales numbers. Eicher Motors loses 12% this week. M&M tanks 10%. Bajaj Auto alone ends in the green.
Bank of Baroda, Vijaya Bank and Dena Bank react to the merger swap ratio, which was announced yesterday post-market hours. Dena Bank crashes over 19%, Vijaya Bank slumps 7%, as the swap ratio is at a steep discount.
New investments in India have plunged to a 14-year low of 1 lakh crore rupees during the December quarter. The rate of stalled projects also continues to be high. That's CMI's discovering. Well, those were the top 5 headlines that dominated Mindspace on Dalal Street. Hello and welcome to Markets Today Talk Back, the show where we tell you all that happened in those 6 hours of trading in just 5 headlines. Today, what happened was they fell and they fell and they fell, the share prices. I'm Lata Venkatesh, with me is Prashant Nair. What a day, Prashant.
What a day. And to think of it, I mean, overnight cues weren't that bad. I mean, yes. The close was actually flattish in the green. I mean, the equity indices. But, well, here there was pain. We'll talk about that. We'll talk about what happened, what drove things, the headlines, the stories, all of that. We'll take your questions as well. As always, Mayuresh Joshi and Mitesh Thakkar are our guests today, both on technicals and fundamentals, and we'll throw the questions their way in just a bit. But as always, as we start the show, let's spend a couple of minutes looking back at both the top-down big factors driving markets the way they did, and of course, we'll talk about stocks as well. Let's begin top-down, Lata, first.
Well, as you said, the overnight cues from Wall Street were not that bad. Some of the indices ended marginally in the green, but the big bad news came just after the closing bell in the United States, with Apple guiding that it will not meet its forecasts because of slowdown in China, primarily, not entirely, but primarily because of China. And that led to, of course, a sell-off in Asian shares, not immediately, but slowly as the truth sank in. Remember, this is coming a day after the China Caixin numbers, PMI numbers, which also showed a contraction in China. So this is, Apple almost reiterating or confirming something which the data was already telling them. In India as well, there is a growth scare. So the growth scare is global. The growth scare is also domestic because of the auto sales numbers. And you had, all the auto stocks ending in the red, deep in the red for the second straight day, barring Bajaj Auto, whose numbers were good. The market had other things on its head as well. There is a big farm package which is looming. No one knows what is the size, but it could be 1 lakh crore, 2 lakh crore, and that's keeping the bond yields higher. And as well, crude prices are kind of, snaking up 10 pence at a time maybe, but getting closer to the $55 mark. So, there was worries all over. But still, I would have to say the bulls beat a retreat. It was not a washout. I mean, the low perhaps was 10,555, which was sometime last week when the market seemed to be tanking on the heels of the global markets. But we are a distance from that. So let us wait and see. We have the bulls have lost 2 days on the trot. Let's see how things pan out from here on. But who were the individual stocks that stood
Absolutely,
out?
Lata. So, I mean, mid-caps and small-caps to begin with, they also, at one point, they were down just 0.25%. I mean, so there was a big difference between the performance of mid-caps and small-caps relative to the Nifty. But by close, that gap closed, narrowed, and look at the losses. Top losing sectors, metals, energy, autos on your screen. And there were many more, but these were right on the top. The big index losers, Aisha, as we highlighted, Mahindra and Mahindra, and these have been losing now for the last 3 trading sessions. Indiabulls Housing was down about 3%. HPCL, IOC, ONGC, the oil stocks all down 3% and more. And there were the steel stocks then, Tata Steel, Vedanta, Hindalco. So, I mean, this broadly gives you an idea of what happened on the Nifty because these are all index stocks. Broader market losses, and as I highlighted, they were also under pressure. BEML lost quite a bit. Jet was down another 6% after yesterday's sell-off. We had JSPL, Shriram Transport, Page Industries, PVR, all well-traded, heavy volume names. Emphasis. There was L&T Technology Services, which came down quite a bit. The ADAG pack, Reliance Capital, Reliance Infra, all of that was also under pressure today. Lata.
Okay. We straight away go to our guest to check out what we can do hereafter or whether there is more fall to happen. First to you, Mitesh, what's your sense? I think pretty much ended at the lowest point of the day. So what's the tomorrow trade?
Yeah, evening, Lata. I think rightly you pointed out that the close was very near to the low and the open was very near to the high. So I think there was some kind of selling throughout the day. Also is the fact that we broke on that important support zone of 10,740 to about 10,725. So that becomes the immediate supply point. Having said that, I think this looks likely that it will stretch and test the levels of 10,500, 530, which was tested recently. So that low should be tested, and there is a good chance that we might even break below that. So for the time being, stay negative unless until we get past 10,750 again on the upside. Use any bounce backs closer to that level to sell, and 10,550, 530 should be the first target. And if we break below that, then we'll take it from there. But definitely that has a good chance of opening up lower levels.
Okay, so that kind of sets us up as far as the index is concerned. We move on to the second story. Commodity stocks, metal stocks were the big losers on the street today. The metal index was down over 2% in trade. The losses, led by steel, particularly non-ferrous was also down. Oil refiners were down as well. So broad concerns about global growth slowdown. I mean, consumption, some of these commodities under pressure. Leading to these sharp drops. We spoke with Morgan Stanley's Chetan Iyer, who believes that China's growth should pick up. He's worried about growth right now, but he believes that there should be a pickup in March, April of 2019. And in turn, that should actually help commodities during those months and post that. Listen in.
A lot of the commodities from demand side is dependent on what happens to China. And so to the extent to which we expect China's infrastructure spending to pick up from March, April, at the same time there is an overall broad-based policy easing that is being taken up, you should see pickup in demand for some of the broader commodities with China's improvement in growth from March, April this year.
Okay. So an improvement expected later, but today all the global facing stocks, which are largely the metal stocks, commodity stocks, got bashed up. And we have a question on one of those metal stocks. Harish Bakuri has called us from Hyderabad with a question on SAIL. Harish, are you on the line?
Yes, yes.
Okay, yeah. If you can go ahead and tell us your question.
I have actually taken 520 shares of SAIL, and I have,
Are you a long-term investor? Or is it for keeps or is it a trading bet?
No, I'm a short-term investor.
Okay, okay.
And on an average, I have taken all together at a rate of 67.43.
Okay, okay. Maybe we should ask our technical trader this, since you're a short-term trader. What's your sense, Mitesh? What can he do? What can he expect?
Yeah, I think the SAIL started declining in November, and from 67.70, which is where possibly he would have bought, I think the stock has come down to 50 and now showing signs of tapering off the declining trend, which means that the recent lows of 49, 48 should be a good support zone on the upside. 56 would be a tough level to get past. So he might want to add more around 48. Keep his stop below 46 on the added quantity, and if it comes to about 56, sell the at least added quantity and part of his original holding so that his average cost comes down. I'm not seeing a long-term reversal over here, but for the timing at least looks like that the stock will bottom out and do some kind of sideways activity for the number of weeks to come by. In case we see a reversal, then I think that might be later on after 4 or 5 weeks, but that's difficult to say right now. The only thing which I can say possibly is to try to add around 48 at the lower end and keep a stop at 46 and play on that bounce back to about 56 to exit his quantity.
Okay, so there you are, Mr. Bakuri. It's not going to 67, but you could average lower. That is the expert view. Mitesh, on that point, any metal stock you like?
I had some short positions on metals. I think Hindalco broke that.
No, I'm sorry. Mitesh, I'm sorry. I meant Mayuresh. Mayuresh, you like any metal stock?
Evening, Lata. No, again, I think looking at the demand-supply dynamics, how the situation in China is panning out at this point of time, the pricing at the LME front. And again, I think the only solace that we probably have is the inventory levels are at low levels. So I think any rebound that is expected to come through from the Chinese market and growth coming back, where I think genuine demand concerns are being played out right now because of the slowdown issues both in the Chinese and the US markets, you're probably expected to see metal stocks being as laggards. So at least at this point of time, I think I'll give them a pass.
All right. Fair enough. So that's the view as far as metals is concerned. The third story, auto stocks continue to reel under pressure post-December auto sales numbers. Slower demand has been affecting sales numbers for the last couple of months, and it kind of sort of shone through sharply in the month of December. Eicher Motors has lost a steep 12% already this week, while Mahindra & Mahindra actually is down about 10% for the week. These are large Nifty stocks, and we're talking about pretty large cuts now over the last week, actually. Week to date is what we're talking about. We've got a question coming in. Rabi Chetri has a question on Maruti. He's got 14 shares of Maruti. His cost is 7,846 rupees, 7,846. The shares were purchased 5 months ago. A long-term investor and wants to know whether he should continue to hold or sell. Mayuresh, back to you. What would you tell him?
Evening, Prashant. No, again, I think looking at the auto numbers, specifically in the month gone by, I think it has been a dismal performance by most automakers, Maruti included. But again, a large element in terms of the expectations of demand normalizing over the next few months. Liquidity has come back into the system. So that probably gives the necessary support that one probably looks at when you're probably trying to finance your vehicle purchases. At the same time, I think the other elementary costs which are actually coming through in terms of third-party insurance going up and so on and so forth did have a sentimental impact at these crude prices which had moved up sharply. Now, crude has corrected significantly. You're probably seeing liquidity come back into the system. And a lot of these automakers have probably taken price hikes to probably protect their margins and mitigate the input cost pressures that they are facing. So I'm expecting volumes to normalize over the next few months, and that largely should play out on the earnings factor. Short term, there might be some pain in terms of the volume number projected, but largely over the medium to long term, I think the story still remains intact in my opinion, at least from an earnings perspective. So it's a clear hold from my side.
Okay. Well, we have yet another interrogator, a questioner. Rakesh Singh has tweeted to us. He wants to invest 5 lakh rupees for 5 years. He is asking whether he should invest it in M&M or Escorts. I wonder why he's restricted himself to just 2 stocks. But which would be the better one, Mayuresh?
So Lata, again, I think if you're probably looking at a long-term perspective, I think diversification should be key. So he's probably looking at that amount. I think 2 to 3 stocks should probably come onto his radar. When you're probably talking about a choice to be made between M&M and Escorts, again, a large element in terms of what can actually come through for M&M, specifically from its farm equipment business. Yes, I think the tepid numbers on that front had disappointed the street, which is getting reflected in their stock prices. But again, the new launches that have come through and the expectations of built up that can probably happen in terms of demand coming through for those new launches should hold up the PV and the UV side of their business. Farm equipment should normalize, and so should the MHCV part of the business, as I was hearing Pawan going on your channel itself. So again, normalization should take place. So having a choice, I think M&M can be a part of your portfolio, but you can also look at qualitative banks. So ICICI Bank is also something that I'll prefer on declines.
Okay. Well, Mitesh, which would be your best auto stock? Today, only Bajaj Auto ended in the green.
Well, I'm not looking at auto actually doing much in the next few months, and maybe, Escorts in terms of outperformance, yes, but absolute gains maybe 8, 10, 12% in the next few weeks, and then we might see the stock taper off, because in most of the cases the long-term indicators are now slowing down. Even Maruti, for that matter, I think, I believe that the stock could possibly do this range of 6,500, which is what it had tested few months back, to about 8,000, 8,200 on the upside. So not much will happen. I think most of the long-term charts are slowing down. They'll mostly range off. So I think try to buy these stocks when the market is at low, closer to about 10,000 odd levels, which is where we've seen multiple lows. I think around those levels, investing for a trading point of view for 5-6 months would be a good idea.
Okay, thanks very much for that. We will take a very quick break, the first on the show. We come back, we'll take more of your questions, but we'll leave you with some market opinion that we got. A little more of Chetan Iyer of Morgan Stanley. We played out that soundbite for as far as Chinese growth is concerned. Manish Sontalia of Motilal Oswal is also someone we spoke to earlier. Listen in, and we are back in a jiffy.
We think the growth will be somewhere around the trend line number, which is around 3.5% for most of the quarters in 2019. But I think the bigger story that we have for 2019 outlook is we think that the mix in growth will change, i.e. DMs will slow, but EMs will actually stabilize. And so therefore, the EMs will take the lead in terms of driving global growth in 2019. I think India is in a different cycle in some ways compared to China. So structural story is intact, and it had a deep cyclical problem because of the adjustments that had to be made during the period post-taper tantrum. And after that, we had demonetization, GST, and just very recently, we had the NBFC problem. But the underlying fundamentals in terms of the policy mix, i.e. what is the real rate levels and what is the direction of broader fiscal policy, has been quite supportive.
1 rupee has really not moved the needle at all as far as the revenue collections are concerned, and you have destroyed the sentiments on the entire space as a whole. The valuations are just not coming back, even though gross marketing margins, I understand, is close to 4 rupees currently on petrol, and likewise on diesel as well. So I think we'll have to wait and a reconfirmation of the fact that it's still a decontrolled environment as far as the oil marketing companies are concerned, but definitely valuations are on your side now. Whether this whole re-rating will happen after the elections or whether that's going to happen, it's not very easy to say, but definitely there's value on the table. 3 issues. One was this insurance hike that was responsible. Second was liquidity issues, and third is this ABS and the BS6 transition. All of this is going to impact two-wheelers, till about the whole of this year.